This is Short Hammer. It is the 24th of April, 2022. And this is Trading Zones. We had a very, I would say, eventful week. Um, I was trampled a few times, but a lot of times it really isn't about being right. Being right is, I think, the ego in all of us is managing your risk and making sure that, I think I mentioned this last week, that if you're fit right 50, 50% of the time, 55% of the time, as low as you can get that number. And I remember Mark Douglas was talking about a guy that I think he was at like a 20% win rate, 30% win rate, but he did tremendous, right? Just because of his style. So for me, hey, trampled a couple of times. Doesn't bother me at all. I get right back in there. If the setup I'm taking is a little bit off on the intraday, um, I'll just wait for the next setup and I'll take that one with the same veracity that I took each and every trade. You got to trust your setups. You got to manage your risk. And you have to make sure that you make data driven decisions. Don't make gut decisions, feeling decisions. Even though sometimes you feel what the chart is going to do, make your decisions based on subjective data. So let's look at the RTY. So what did we see happen this week, right? So last week we were here, right? We're looking at this is Sunday. And what you can look at, or what you can glean, right, from looking at this chart here, is that we got down here around the 1990 on the RTY. And what we're not seeing is acceleration to the downside. Whenever something is going in a direction, right, what you want to see is confirmation by either buyers or sellers that we're going to see continuation in that direction. And we didn't see that, right? So all we're seeing, look at this lower wick, right? Then we have another wick, another wick, another wick. And even though we had the rejection to buy up here, look at these wicks. We're not getting closes below this 1990, not any strong ones with continuation. The first one that we got, that was below the 1990 was here on the 19th of April, right? We got a little bit of a close here that's lower than the previous few days. So you can get excited about this and say, hey, maybe the next one is going to run us down into the 1962 area. But what happened? Big bullish engulfing, right? Meaning that the buyers totally engulfed this candle by the close on this 4-hour candle. Next candle, boom. So any thought, right? As if you have a bear, I mean, if you're a bear, not if you have a bear, but if you have a bearish perspective on the market, any thoughts of trying to short this, you got wrecked. Unless you were just, quick in and out for a few points, you got wrecked here. And that's a beautiful play, right? And so what you would want to do here, if you're bearish, if you're a bearish trader, what you want to wait for is, if you're looking at this, is signs that the buying is over, right? And there really wasn't a sign here, because what you really want to see is a candle that closes below the previous candle to show you that, hey, this is, and so, like, hey, the momentum is reversing here. And the first candle that did that was here on the 21st. So all these other candles, this was the first lower low close. So the previous candle, the close was 2053, right? And the low was 2043. This candle, the close was 2046, below that 2043. The next candle, we see some selling. So rather than sort of replay the week, what are we looking for now? Based on where we are, let's zoom out and look over here. The last time we were down in this area was back in mid-March, right? And what did we do? We sort of dipped a little bit lower. We see this pop blue pivot here, and we reversed. So every time we were here, the previous two times, the buyers stepped in and bought us back up. Will that happen this time? Well, it's possible. Well, why is that? Why is it possible? It's possible because the upcoming week of earnings is going to be bananas, like BANA, Gwen Stefani nanas. So this is going to be a crazy week, and I'll go through some of the expected earnings that are should be coming out this week, but just be careful, right? If you're bearish and you think the market's going to continue to dump, be careful, because the last two times that we were down on the RTY, down in this 1920s area, the buyer stepped in and bought us back up. So just be careful. That's all I'm saying. Just be careful. This area could get a little bitty. So be careful. So what we want to watch for is to see if the buyers do step in the 1920s or in the 19 teens, meaning 1917s, 16s, 15s. Wait to see if the buyers step in. If we continue to sell through that area and we get a continuation down and closes down, meaning not these wicks that show that the buyers are trying to push this bad fella up, not these, right? These are just waiting to be bought up. Look how that looks. Let's see how this candle plays out, right? So let's see what happens on Sunday and on Monday and see if we have buyers. If we don't see any buyers and you see these candles are heavy, meaning full to the bottom, that would mean that something in this area has changed, right? And if we are continuing to sell down here, then you want to keep an eye open for this looks like the 1880s. We'll see if we go that low, but I'm just not chasing any shorts. Why I wouldn't be. I'll be definitely very careful. Let's jump over to the MES. And away we go. So looking at the MES, nice sell. And what's funny is the setup is different. The MES was a little bit more bullish than the Qs. And just looking at this buying, if you're only watching the MES, do you really think that we're going to push up here into the 45.13-ish area, right? But this is the thing you have to keep an eye on. If I hold the cursor here, look to your left. Let's slide it over, right? 45.02. Let's slide it to the left. Past the pop, gray pivot to this. What do you see here? The last time we were here, look at these upper wicks. Rejection, 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 right? You see the rejection here around this 45.12s, 45.13s. The highest close was 45.06. That's the highest close. So even if you go back, right, look here, back in March from the 22nd, 23rd, look at that. Then even here, see these wicks. This is showing you that there's a little bit of turbulence right around that 4,500 area. Look at here. See the bounces? Flips downside, back test, downside. So that's just showing us that in that area, there's just a lot of turbulence, and there could be a disagreement in that area between the buyers and sellers, right? And so that's an area to watch. So if you were longing this and chasing this up, you'd watch this hitch first, right? We got through there, but check this out. The first time there, what happened? Slight rejection. We buy through, we sell back down. Look at that. Then we base and we go back up again. But first touch, this reversal area went down. This one too. Look at that. Right? That's interesting. And then now we're here where we struggled again. Then here. Like these candles, it's like Olaf says, water has memory. The chart has memory. when it gets to certain points where something happened before, it's good to look back on the chart to see, hey, maybe like last time we were here, was there buying, was there selling, what happened? And context is important as to why the buying and selling was going on. But if you see a technical level, just based on your candle structure, and we're approaching that level with similar candle structure, it's definitely interesting. And then we sold. So what are we watching for next week? So we're right above the 42.49 line. Nice little bounce there. So to the downside, we have 42.03. Then we have 41.68. Not sure if that's going to happen. Just with all the earnings next week, it's going to be definitely nuts. So watch that, but also watch the 42.80, 42.91, 43.15s. We could definitely bounce from this area, but I'm going to wait to see how the week shakes out. I'm going to be definitely very cautious with all those earnings that are coming out this upcoming week. Be very cautious of your positions. Very, very cautious. Let's go to my baby MNQ, and it says that symbol does not exist. That's possible. Okay, okie dokie artichoke. So what were we watching last week? Oh, I love the MNQ. So beautiful. We was like, hey, this could be like a janky M pattern. What's going to happen, right? And we kind of started to sell. Then we bounced. Back test, bounced, which caused me to draw this trend line. I'm like, this is interesting. And so when we were sort of pulling back this day and we bought up, I'm like, oh, snap beans. The buyers are telling us no. And so when we were buying back up, I thought that was interesting. As we were going up, I'm like, that's really interesting. There's a lot of strength there. But when you see wicks like that, that always, for me, that always sort of gives me pause. And it makes, if I'm sort of thinking about shorting, it makes me change that perspective altogether, because I want to see what the next candle does. And we bought up, right? But if we look to the left, we did not close higher. Didn't happen. Just look at these wicks. Couldn't even get through the 200 here, this orange line. And what we ended up seeing was a big sell candle that went through this little uptrend that we had going on the 4-hour. And that's how I knew it was a wrap. So after this happened and we closed below this little trend line, I was then looking for short setups on the pops. That's all I was looking for, is on the intraday, how can I find short setups on these pops until we get back above this trend line? And we see the rejection here as we try to sort of get out of this tailspin, and then more downside. So what are we watching for? So the last time we were down here, looks like we went a little bit lower, down around the almost, wow, that's low. Almost at the 12s, right? And this one, almost to the 12s. This one. So watching this, looks like we may have a little bit more room to go. Maybe the 13.118 is the first stop. So we'll see how that shakes out, right? We see these little zones, 13.243 by 13.266, 13.089 by 13.118. We'll see how this plays out. Or if we open up and we're up here around 13.425. So we'll see. But I'll be watching it. I'll be watching these levels. Please take these levels down if you think they may be helpful for you. But I'll definitely be watching this. And so what I definitely want to bring up now is this upcoming week, we have earnings on deck. So, Exxon, Caterpillar, Amazon, Meta, formerly Facebook. Then we have Google and Microsoft, airlines. We have JetBlue, it's Southwest, McDonald's, CMG. Just there's just so many companies that are reporting. UPS, Whirlpool. It's just going to be a crazy week. So be careful, right? Because Boeing, wow, Humana, just be careful. And the reason you want to be careful is that we saw, quite a bit of selling this last week, right? And there were some earnings that may not have gone the way that people thought that they should. But in this upcoming week, we're going to have some big earnings, right? And there is a chance for reversal. But be careful, because remember what we talked about last week, right? A lot of these companies know that, especially if it's an American company, they know that the Fed is raising interest rates. And when the Fed raises interest rates, it usually puts a cool on the market, a cool on spending, right? It sort of cools off a little bit. And what I mean by that is that inflation allows companies to charge more for their products, because there's a assumption that they're paying more for the materials to make those products, right? And so people accept that they are going to have to pay more for some things. But when with the Fed raising the interest rate, right, inflation is kind of out of control, right? But also we talked about the war in Ukraine and Russia and what's going on there, and how that impacts inflation with the impact on the global supply chain, on the global food market. There's a lot of unknowns for a lot of these companies, and the chances are in a high inflation environment, with the Fed trying to do everything in their power to drop the inflation, right? Which means people are going to or people usually, right, will cut back on their spending. And so if people are purchasing less, a lot of these companies are probably going to need to guide down. That's just, they're going to need to guide down, especially companies that are not profitable, that have a lot of debt that they may have to refinance. They're going to have to refinance that corporate debt at a higher interest rate. The longer it takes them to refinance that debt, the more expensive it's going to be. Also, if they're doing new money raising or debt strategies, where they're sort of getting new debt, right? Maybe to fund growth or fund different projects or different things that they're building out, the interest rate's going to be higher. It's going to cost them more to service that debt. So that's something to consider with a lot of these companies. Just the rise in interest rates, inflation, and the challenges there. Also, the global supply chain, how that may be disrupted by what's going on in Ukraine. So it's a lot of variables to consider, and companies that may be impacted by some of these things that don't seem big. And also right now, okay. So I know it's like nebulous, right? So the US kicked a few Russian banks out of SWIFT. The reason why it's a big deal, and people say, oh, Russia's not, Russia, how big is Russia? How much money does Russia really spend? How many, like, you can't look at it that way. What you have to look at it is, okay, China, which has its own payment systems and things that it's trying to do, has been trying to get away from the dollar as the central currency, right? That they use when they're selling oil with different companies, exchange. Like it's a lot. There are some countries that have been trying to get away from the dollar because of the power that it gives the United States. What's going on in Russia now may cause some of those countries to find a system that they can use that's outside of SWIFT, outside of dealing with Visa and MasterCard. And that's interesting, right? So that's something that some people may be worried about, is there being a split in the global economy where some countries are still utilizing SWIFT while other countries may not. And some countries may still be utilizing Visa and MasterCard, and some countries may not. So this is also interesting for Visa and MasterCard, right? Because this is something that seems that it's only a conflict that's going on between Ukraine and Russia. Just the ripple effect of that is so large, because there's so many different variables and just ways that we like. I think so. I'm going to get off of this right now. My point being, there's a post Ukraine Russia war world. I mean, there's a pre Ukraine Russia war world, and there's a post Ukraine Russia war world. And I think the world is going to be a different place in just a lot of different ways. And how the global economy is viewed may be a little bit different. And so just stay flexible in your trading and don't go in too heavy. Just be careful. If you're wrong, don't blow your account. Manage the risk. So apologize for the soliloquy. Let me keep it moving. So we'll see what happens next week. But until we get above this trend, I'm thinking that we're going to sell all these. So we'll see what results earnings has on the charts, on the futures. We'll see. We'll see if earnings are strong enough to run it up, right? I mean, earnings were part of the thing that was strong enough to bring the market down. So technically, all this can be bought back up. We'll see. I mean, personally, I'm just waiting to see how things shake. And I'll just be scaling in and scaling out of different setups and structures that I see. I won't be in much of anything overnight. I'm going to be in and I'm going to be out. Intraday trading till all this stuff settles down is to me the best way to go. Apologize for how long I was just, talking about things, but I just thought it was really interesting. So, so what were we discussing in the last video? One of the things we were discussing was that we saw that there was a tendency for Amazon to hold the 320s, the 3020s, and then bid through the 3080s. So if you took this trade, the 3020s, you did get paid out on this push through the 3080s. It went much higher actually, right? So that would have paid well. And then we came back down and we sold strongly through the 3020s. We weren't even strong enough to get a buyback up on the 4 hour to back test that, but that's okay. But this is awesome. So what are we watching for now? The next levels we're watching for now that we're down here around the 2887s is a potential test of the 2836s, and then we'll see if we dip lower into the 2781s and even lower into the 2660s. We'll see how this plays out, right? But we have to remember Amazon has earnings this week, and we'll have to see if people that are already in Amazon that may have been buying heading into earnings may be trapped and maybe looking to push this up a little bit. So this could get interesting this week too. So be careful if you're trading Amazon. But watch those levels to the downside. To the upside, we can get back through the 2950, back to the 3020, then 3068, then above that 3142. We have to see how this plays out. That would be definitely a massive move if we did get that. But you know what? For Amazon to move a few hundred points on earnings is nothing. So as we're looking at this big drop, this could easily be erased, right? So just be careful in your trading. And just don't be, I'll say, don't be, let's go to Microsoft. Just be careful. That's all I'm gonna say. Just be careful. And we see Microsoft dipping to the left. Nice rejection. I mean, nice reversal here last time we were here on the 8th of March. Then before that on the 24th of February. Both of these times, last time we were down here in the 270s, 271-ish area, we did buy back up. So keep an eye on that, see if we sell through. If we sell through, what do we have? Man, not much. So it looks like this area has been an area where the buyers have stepped in. So we'll see if that continues to play out. Remember, we have earnings. So to the downside, we have 271, then 267. Below that, 265. To the upside, 276, 278, and 283.62. We have to see how this plays out. Microsoft does have earnings this week. So just keep an eye on that to see how that shakes out. And remember that what I mentioned about the previous setups last time we were down in this area. I think that's interesting. That's something to note. Then next up, let's go to NVIDIA. Nice sell. Last time we dipped into the 210s. The buyers did step in, but not this time. So the last time we were this low, look how far back is it? Wowzers. Wow. Last time we were this low was August of 21. That's interesting, right? So it looks like we might go lower on NVIDIA. Let's see what chips do. But that's bad. Man. Get this off of here. That's bad. That looks broken. We'll see how NVIDIA shakes out, but chips have been funky, and I think we may see more weakness here. I'll be watching to see, right? But to the downside, we have 181.91. To the upside, 292. We're kind of in that middle area. We'll see how this sort of plays out, but I'll be looking to see when the market opens if we get a buyback up over 292. If so, then maybe it does open up a back test into the 210s, 211s, 212s, that area. We have to see if the buyers are there to give us a bid. If so, then watch out for the 217s. But we're going to need buyers, if we get back into this area. And what's funny is if you're looking at this selling, right, on the 18th, we had a little bounce in that area. This previous area here to the left, this 210s, we had a bounce. They tried to buy us back up, and they did. And on the sell, we had a hit right at 210, and we sold. So that's interesting. That's an area to watch on NVIDIA. We had to get back through those 210s. I'll set an alert later on that. But just I keep saying it over and over again. I know I sound like a broken record, but just be careful. Just be careful. Okay, looking at Meta. So the last few times we went down, we bounced at the 184. It was like 184 60s. So we'll see if this happens, if we get back over that again, but we're selling through, right? We have to see what type of continuation we get there. The next line that we have is the 179, then 173.11. Let's see. Yikes, a long time ago. So we're down. We have to see if we continue to sell. Yeah, we have to see if we continue to sell here. But the 184.60s, last few times we were down, the buyers were there. To see if we get back over this and get a tag off this 184 and then push into the 191s. That would be interesting. That's something I'm going to be watching for on Meta. If we continue to sell, watch 179.60, 173.11, see if the buyers are stepping in or if they're just going to let this bad fella go. That's something to watch on Meta, in my opinion. I'd watch for that, see how that plays out. But definitely struggling. Okay, let's keep it moving. Let's go to Netflix. Netflix was great this week. So this selling was just unbelievable. Netflix lost quite a few subscribers, and I do believe we did discuss Netflix. And one of the things that we were saying was, where are they going to find eyeballs? And we remember we did discuss how what they offer is just there's just too much competition and there's too much content out there. And we did talk about nostalgic content and how valuable that is. And I think we saw that play out this week with the tremendous loss in subscribers of Netflix and sort of what's going on with them right now. Right. And so a lot of these other platforms, especially at a time like this when there's so much going on in the world, people are craving nostalgic content. And how much of that does Netflix have? Maybe not as much as some of the other places, but we'll see how this plays out. But I think I think Netflix, there is a potential for it to go lower. Let's see. Yeah, I think that Netflix can easily go lower. Just be careful. Um, the last time I can't pull up the last time we went this low, but just be careful on Netflix. Let's see, what do we have? Yeah, see, all these are up top. What I'm gonna have to do is go over to the other platform and pull my lower lines because I have lines all the way down to the 90s on Netflix. So I'll pull some other lines to make sure to add them to this chart. Or I could just draw new lines. Doesn't matter to me. All those things work. But be careful on Netflix. It's at a very perilous area, I think. And I think the market is in a perilous place. And this upcoming week of earnings needs to be good for a lot of reasons. It needs to be a really good week. And if it's not, it could get really ugly. Looking at Intel, nice little bounce here off of the 45.44. Almost hit the 49.16, came back down. We had a slight hitch here at the 47.27. Now we're selling a little bit. See if we hold the pop gray here, which is this pivot. But Intel's interesting. I'm not trading Intel. I have not been trading Intel. It's been a while since I traded Intel. But these levels on Intel definitely still hold true. If you wish to add them to your chart, it's probably a good idea to use these purple lines here, the ones that I draw in. Getting off of Intel, going straight to Tesla. Now Tesla was beautiful, and Tesla is still beautiful. So what we wanted to see on Tesla was a break of the 1040, or a break of the 960s. A break of this level here. And so that's what we were waiting for. And once it sort of went above the 1040, I thought we were going to go, but we ended up retracing. I actually took a nice size drawdown on Tesla. I had to get that bad fella back. Because it went in a way I didn't think it would go. Went further than I thought. But a break of the 1040s, you're looking for nothing but longs, and below that you're looking for shorts in the middle. But once it's in this little balance area, it can go either direction. So we've got to be careful. Let's see. So we look like we're seeing a little bit of bouncing here on the 994, but it still looks weak. So we have to see if we're going to see a dip to the 974. A break of that would open up the 968, then or 969, then the 937 on Tesla. If Tesla breaks the 960s, then we're going to dip a little bit, right? Probably down around the 930s, and we'll see how that plays out. But I'll definitely be watching Tesla. CI. So we were talking about this candle on CI last week, and we sort of bought up through that area. And then we sold right back through. Be careful of CI. It's one of those tickers that moves in waves. So it could be down to 247 by Monday, or back up here around the 260s. So where we are right now, we're below the 255.95. So it seems as if the next level is the 247s, 238s. But take a look to the left. You see these areas here where the buyers stepped in. That's something to keep an eye on, to see if they hold or if we continue to sell through this level here. And this level is the 253 hole. So we see if we sell through 253. And let's see. I think that might be. I think that's it. I think, is there anything else that I want to hop into, take a look at, to go through? I don't think so. I think that's it. You enjoy this video, please don't hesitate to subscribe to our YouTube channel, Power of Pivots, where you can look forward to receiving videos from me, but also videos from Elisa as she discusses how she utilizes her Power of Pivot strategy to find great pre-market, intraday, and post-market setups. Thank you so much for your time, and pray that everyone made it out of this week profitable. It's a really good week for me. I like when we have range. I don't like all the other things, to me aren't really that relevant. I just need range in the market. And I'll find something. But thank you so much for listening to this video. Prayerfully, it was helpful. It is what I will be watching going into this upcoming week. Definitely manage your risk, stay safe with your family, and enjoy yourself. See you next week.